Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly IWM report. That is the Russell 2000 ETF for the week of Monday, February 7th, 2022. Before we take a look at the charts, just want to encourage you to please click like each and every time you watch the weekly IWM report or any weekly or daily analysis that Wicked Stocks uploads to its YouTube channel. It helps us a great deal in being found on YouTube, as well as subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded, and that includes the weekly IWM report, seeing it early in the week, certainly before the opening bell on Monday, so you can prepare and, yourself for the week ahead in terms of your trading and analysis. So, without further ado, let's jump to the charts. I'm going to back up just a little bit and show that, that a couple weeks ago, we did test that long-term channel top that we settled above over a year ago at 192.57 this week. It is a formation that can absorb selling through the year, perhaps. I have made mention, though, of the fact that we're not out of the woods yet in terms of the sell-off. I mean, we fell back below a congestive formation that played out over the course of a year. And the extremes of that, if you measure 207.21, the former low area, against the move high 244.46, if you flip that on its head, so to speak, to the downside, that's 169.96, the full measurement of that congestive area. So, a lot of times when you break out of congestive ranges that are protracted in nature, like that one was, whether to the upside or the downside, you can sort of target the full measure of that former congestive area to the upside or to the downside. So, 169.96 is not out of the question over the weeks ahead. And, if we close below 192.57 this week, certainly that becomes our next target. There's a lot going on down there. You've got the old high 2018 of 173.39. You've got a 50% downside retracement from the 2020 COVID low, March 20 low, against the more recent high. I think that was in December, maybe November, something like that. So there's a lot going on between 169.96 and 173.39 that, if tested, that area as well can contain annual selling pressures. I don't expect to see it unless we close the week below 192.57. Until then, 192.57 is kind of a bottom picking zone. And upside, and I mean long-term bottom picking zone, like not only for aggressive day traders, swing traders, but even long-term investors who are looking to buy the small to mid-cap arena as represented by the Russell 2000. I think it's called a small cap, but I think the actual capitalization, the average capitalization, is in the small mid-cap area. It's not really a small cap as far as I can tell. Anyway, so upside this week, I've got 203.55, which is nothing more than the high of the move low from 2 weeks ago. It managed to roughly capture last week's highs. I think it's a meaningful upside pivot point into later February. Even if we close above 203.55 on a daily basis, that should result in bullish continuation. But until then, I would sort of characterize the next few weeks as a 203.55 ceiling, below which that 192.57 long-term channel top is in reach over the next, maybe this week. But if we close above 203.55, even at the end, on a daily basis, not just at the end of the week, but I think even on a daily basis, if we close above 203.55 on Tuesday, for instance, we should get follow through into later week. My next target then would be 211.91, this descending channel top that incorporates trade over the last couple, 2-3 months. And it is our sort of midterm ceiling now. So we could test 211.91 over the next few weeks if we get up and over 203.55. There's a lot going on there, not just the descending channel top itself. But, you can just see I drew a horizontal line at 211.91 to show you that it roughly includes a lot of old lows. I mean, we broke below them, but it is a meaningful zone of resistance that, if tested over the next week, 2 or 3, can contain buying into March trade. And we could fall off from there back to that 192 and change area, that long-term former channel top. And then really not until we close above 211.91 am I comfortable saying that we're out of the woods in terms of this sell-off, and that we should then see meaningful recovery into the second quarter. Closing above 211.91, that 239.17 channel top, we could see that in as little as 3 to 5 weeks, but I think probably more like 2 to 3 months, because on the way up, there will be a meaningful set of resistance levels that could contain weekly, possibly monthly highs. So I would say closing above 211.91, we have a 2 to 3 month target at 239.17, where we could top out on a quarterly basis, and is the area to settle above 239.17 for actually indicating a good annual low and bullish continuation then expected into later year. I'm not prepared to give a target on that because I really need to see what fleshes out here in terms of what is going to be the move low. It may have already occurred by having tested that 192.57 formation, but I don't see bullish continuation into the second quarter, as I say, unless we settle above 211.91, and then we got 2 to 3 months where we're expecting 239.17, and then we'll just take it from there. I think that pretty much covers it for the IWM for this week. Please click like if you haven't already, and subscribe to the Wicked Stocks YouTube channel, and I will be back in a week for next week's weekly IWM report. That's all I've got. You have a great week, and we will talk soon.